Complex structure and internal structure. What is complex structure? Sometimes structure will not be as clean as it was in the previous section. Sometimes it can give us something that is a bit more complex. This is referred to as complex structure. In these situations, you will notice that there are multiple highs and lows that are hard to decipher which one is the structure high and the structure low. Complex structure can come in the form of a complex retracement, complex continuation, complex structure rules, bullish complex structure rules. In bullish structure, a structure high or low is not a structure high or low until it creates a new structure high or high. The structure high or low must come from the lowest point of the entire retracement move. Bullish structure is not broken until a structure low is broken. Price breaking an internal low does not count as a break of structure. And then once again, follow with me. I'll wrap it back around so you guys the full gist of it. Bearish complex structure rules. Same thing, just the exact opposite, of course. In bearish structure, a structure lower high is not a structure lower high until it creates a new structure lower low. The structure lower high must come from the highest point of the entire retracement move. Bearish structure is not broken until a structure high is broken. Price breaking an internal high does not count as a break of structure. So what is internal structure? Internal structure is any point that is not a structure high or structure low. These points will be within the immediate range of the structure low and structure high, but will not produce a new structure point. Sometimes internal structure will be referred to as noise. The reason it may be called noise is because all of the internal points of structure can be metaphorically loud and distract you from structure. And I think I probably should have some pictures at this point. I think that'll help. So I will pull up my chart to kind of tell you what I'm trying to say. In bullish structure, a structure higher low is not a structure higher low until it creates a new structure higher high. So what I mean by this one, in clean bullish structure, it'll be something like this. And I know this structure low is the structure low because it made a structure high. But in this case, it would be a structure higher low that made a structure higher high. So what I'm trying to say is when you have complex structure, for example, in complex structure, you may get something like this. So how do I know that this higher low or this low is not a higher low? Because remember, if you backtrack, I can see everything in the moment now. But when I was trading, you're going to see something like this. Price starting to go up. How do you know that this higher low isn't a higher low? How do I know that this is not a structure higher low, but actually an internal higher low? And my rules for that is the structure higher low must come from the lowest point of the entire retracement move. Bullish structure is not broken, or let me see, yeah. The structure higher low must come from the lowest point of the entire retracement move. And so you don't know when the entire retracement move is done till price creates the higher high. Once price creates the higher high, then you can go back and you can see, hey, this is the entire retracement move. If this is the entire retracement move, then what is the lowest point of the entire retracement? Well, the lowest point of the entire retracement actually wasn't here, it was here. So price created a new higher high. This tells me that we have a new structure range. Price broke above. There always has to be a new range once price breaks above the range or below the range. In this case, it went above. Okay, so now what is the structure higher low? The structure higher low would be the lowest point of the entire retracement. An internal structure would be considered this and this. So they are the points within the structure range that are not structure points. If it's not a structure point, then it has to be internal structure. Does that all make sense?
Yeah, I just kind of confused because you don't say like downtrends and uptrends, and other videos that I watch, they usually say that.
Got you. Yes. I personally say bullish structure and bearish structure. Bullish
Yeah.
structure is the exact same thing as an uptrend, and bearish structure is a downtrend. So I know I'm using a different word for it, but if you want to look at it the exact same way, it truly is. People will call this an uptrend. I've just never heard complex uptrends. I've heard of complex structure. So this is why it kind of works better for me. But honestly, it's the same thing. If you want to call it upwards price action and downwards price action, that's fine too. But yeah, I know you might get confused, but if you want me to rephrase something or say it again, let me know. I'll help you out. But I do use the word structure. Naz, you there? You following along?
Yep, still here.
All right, cool. So that's what I'm trying to illustrate here. These are my rules. In bearish structure, the exact same thing, but flip. In the perfect world, we want to see this. And sometimes that does happen, but sometimes you'll get something like this. So we understand that this is a structure high down to a structure low. Looking back at it now, I can see, okay, this is my new structure high down to my structure low. But the reason why I have my rules is right here. In bearish structure, a structure lower high is not a structure lower high until it creates a new structure lower low. The structure lower high must come from the highest point of the entire retracement move. So understanding that this whole move is the retracement, I have to find out what is the highest point of it. Well, the highest point is going to be here. And then it led to a new lower low. So this is my new structure range. This is my new structure lower high down to a lower low. Everything else in between will be internal structure. The reason why this, can you see my cursor? I'm sure you can.
Yeah.
Great. The reason why this first lower high is not a true structure lower high is because it did not create a lower low. The second lower high can't be a structured lower high because it never created a lower low. Finally, price comes up here and it eventually makes a new lower low. So that has to be my new structured lower high because it is the highest point within the retracement. You guys got it?
Yeah, so pretty much just that's just a downtrend, uptrend, and just down.
Yes, the reason why I was hesitant to say that is because overall, this is all a downtrend. This move right here is a trend within a trend. So yes, you can have an uptrend within a downtrend, but I want you to understand that just because this is an uptrend, you shouldn't expect price to do this,
Yeah.
to keep moving up, because the bigger picture of things is a downtrend. Because if this is a structure high down to a low, and we are in a downtrend, bearish structure, wouldn't you anticipate price to make a lower high and then a lower low?
Yeah.
So when you get this complex structure and you're getting this uptrend or bullish structure within the downtrend bearish structure, you shouldn't anticipate price to continue this bullish uptrend, bullish structure, because you're still in that downtrend bearish structure.
So you would put a put in for this, not a call.
So I think you're going off of options. I don't trade options, but I believe a put is a buy. So yes, if you were trading that, yes, you would buy.
So this would be a buy. You would buy this.
I personally wouldn't buy this. The reason for that is because I understand that price is in a downtrend. Yes, price is giving a smaller time frame uptrend and you can buy it, but do I
You
want
sell
to?
it, not buy it.
Correct. I want to buy it. I mean, upsell it. So price
Okay.
does.
Okay. Yes. Okay. All right. Yeah. So you would sell some. So yeah, because
Yeah.
it's going down, you would sell.
Yes, I would want to sell to catch this whole move, right? Some people, they will want to
Right.
buy this, which is fine. Not saying you can't buy this whole move, but me personally, I'd rather catch the sell and catch the bigger move than take the buy and catch the smaller move.
Could you buy and sell that if you're quick enough, or is that not a thing?
Absolutely, you can. I don't recommend it. I would just be patient and take the sells and catch the bigger move. But if you want to take the buy, absolutely. If you want to,
So, if, for instance,
go for it.
so for instance, say for instance, you was like, okay, this is going up, so let me go ahead and buy this, and then I'm like, okay, well, it's about to go down, so let me hurry up and sell. You could do that, right? Or is
Yeah.
that not something that is that too risky for most people, or for most instances?
You can. I recommend not to do that.
Yeah.
And the, but you can though. Absolutely. If you're good enough to do it,
You don't recommend doing it.
I don't. I'd rather just wait for my setup
Okay.
and take the play. Because once again, like
okay.
we were talking about the other day, you really only need one setup, not even every day, you know? You could take one setup a week
Right.
if you really want to. If you want to take 5 setups
Okay.
in a day, go for it. Be my guest. But I'd rather wait for the sell, put a nice sell entry up here, and catch this whole move. Because this whole
Better
move
safe
here,
than sorry.
this whole move here is going to be a lot more money or a lot more pips than catching a move here. And once again, like I told you, when
Right.
you are in a retracement trade, you don't know how far that retracement is going to go. Price could have easily went here and then dropped. So here, if you're in a buy,
Right.
you would like for price to go as high as possible, but you don't know that. You don't know when the
Right.
retracement is going to end. So when do you take profits? So that's where it gets kind of risky.
Okay. So yeah, just rather be safe than sorry in this instance.
Yeah, and even when it comes to time, like, do you really want to be in the charts trying to catch all these ups and downs? Because somebody out there will try to catch this buy, sell, buy, sell, buy, sell, buy, sell, buy. You can, but do I really want to place 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades in a day? That's up to you. I don't recommend you do that. If anything, I would, if you want to take a buy, try to take a buy down here and catch some of it, and then take a sell. And now you brought it down to 2 trades. Take 2 trades in a day. I think that's fine. Or throughout time, I've noticed a lot of my losing trades come from retracements. So what do I say? I'm not taking retracements. A lot of my winning trades come a lot of my winning trades come from continuation plays. So why don't I just take more continuation plays?
Okay.
You get what I'm saying?
Are you usually more risky with your own money, or when you're using like a account that you bought? Like, say for instance, you were wanting to take more than one trade. Do you usually do that with your own money, or with the money that you get from the accounts?
Well, I only use a prop firm. I really don't have a personal account. And
Oh, really?
yeah, because with the prop firm,
So
I'm
you,
not. Go ahead.
I didn't realize that's crazy. So you're really. I hear a lot of people on like TikTok and Instagram and stuff and YouTube say like, oh, like most of the people that do is that fail, but you're one of the people that don't. I'm guessing.
Yeah, so like I said, you don't, in my opinion, yes, the prop firm takes a split. Typically, it's no more than 20%. You take home 80. But like I was saying before, I don't take on I don't take on any of the risk. When I have a $100,000 account and they fund me with that money, If I lose $10,000, I don't lose that $10,000. The company takes on that risk for me. And when I profit, sure, they take a split. They may take 20%, they make 10%. But the fact that I'm able to use a $100,000 account and not take any losses, I'm not taking losses, not taking any risk. I don't see why everyone wouldn't be doing that.
Right.
You
I
get
mean,
what I'm
it makes
saying?
sense. I just heard it's very like hard to do. That's all. You know.
Yeah, if you know how to trade, it shouldn't. I'm not gonna say it shouldn't be hard. If you know how to trade, it's doable. Because guess what? This if you are failing your demo accounts or you're failing your challenges, either or, what makes you think you can trade your own money?
Right.
So if you're filling a challenge account
No.
that's worth $100,000, what makes you think that you're gonna put $1,000 into your account and be able to trade that, and vice versa? If you
No, it
can't trade
makes
a
sense. It
thousand
definitely makes
dollars,
sense.
if you can't trade $1,000, what makes you think you can trade $100,000? It works both ways,
You
in my
can't.
opinion.
Okay. No, that makes sense. I was just that makes a lot of sense.
Cool. Internal structure rules. Internal structure rules with bullish structure. In bullish structure, any low point that does not create a structure high or high is an internal low. Any high point that is within the structure's range is an internal high. What I mean by this, in bullish structure, any low point that does not create a structure high or high is an internal low. Meaning, did this low create a new structure high or high? It did not. Therefore, it has to be an internal low. Did this low create a new structure high? It did not. So it has to be an internal low. Did this low make a structure high? Did. So therefore, it is not an internal low. It is actually going to be a structure low. Any high point that is within the structure's range is an internal high. So no matter what, if the high is within the internal range, it has to be an internal high. So this high, is it within the range? This is the range. The fact that it's within the range, it has to be an internal high. Is this high within the range? Yes. So it has to be an internal high. So those are my internal structure rules. Does that make sense?
Yeah.
Internal structure rules with bearish structure. In bearish structure, any high point that does not create a structure lower low is an internal high. Any low point that is within the structure's range is an internal low. Do you guys want an illustration for that, or do you guys get it?
Can you do
Illustration would be nice.
yeah.
So you guys see how this is a structure high down to a structure low? Obviously now, yes,
Yeah.
it would be this to this, but before we get there, this will be the structure's range. So structure high, structure low. This high cannot be a structure lower high because it did not create a lower low. Therefore, it will have to be an internal structure. Same thing with this one. Did it create a new lower low? It did not. So it has to be an internal structure point. This one, this actually did create a new lower low. So therefore, this has to be a structure high. And since it made a new structure lower low, this has to be a structure lower low. The highs, if it is within the range, it cannot be a structure high. This low. If the low is within the range, it cannot be a structure low. This low is within the range, it cannot be a structure low. Therefore, these two lows are internal structure point. And I should change the color. And now your new range will be structure high down to your structure low. Does that make sense?
Yeah.
Yeah, I think so.
Why is complex structure important? It is important to understand because if you do not read it correctly, you may get confused in which structure price is in. Sometimes you may think price is giving bearish structure, but it is still, in fact, bullish structure and vice versa. How to spot complex structure? Complex structure can be spotted whenever there is an internal structure point involved. Complex structure can come in the form of complex retracements, complex continuations, both. So I won't read through all this because I think it will probably bore you. If you guys want me to read it all, that's perfectly fine. I think it's probably better if I just explain it verbally to kind of get straight to the point. I just personally wrote it all out as detailed as possible. So for people that actually want to read it and not watch the video, they have access to truly understanding and having all the details needed to understand it. So bullish complex structure with the complex retracement. So as I was showing you before, this left side, I know you guys can't see my cursor, so let me know if you guys can't follow along for some reason. That's perfectly fine. I'll fix it for you guys. On the left side, it says bullish complex structure with a complex retracement. So starting from left to right, you see that first low to high. Would you guys agree that that is the structure's range?
Yeah.
Cool.
Yep.
And the continuation leg is represented by that blue arrow. Now, the red arrow comes into play, but it's not one straight line. You have the internal structure points, and those internal structure points is what causes the complexity of the retracement. So if you notice, the first continuation leg is very clean. It's not complex. It's just straight low to high, one big push, pretty picture perfect. But the retracement, you have the multiple lows, you have the multiple highs, and then finally price makes a new higher high. So right here, what I'm saying is bullish complex structure. So price is in bullish structure, but it's complex because there's a complex retracement. The continuation leg is not complex, but the retracement leg is. Does that make sense?
Yeah.
Nas?
Could you is there any type to say it a little bit differently? I didn't
Absolutely.
really get it that
Nope,
well.
you got it. So back to this one, bullish complex structure with a complex retracement. So this is the low to high. We got that down, and that's where the range is represented. If you notice this continuation leg, this continuation move, again, we're in bullish structure, so this has to be the continuation move, is very clean. There aren't internal highs and internal lows and any confusion. It's pretty straight to the point. What gets complex about this is that price gives a complex retracement. Instead of price doing this and this, what it does this. And that's what makes it confusing. And as we know by our rules, all these are internal structure points represented by this color. And we understand that this right here was an internal lower low at one point, because again, we don't know if it's a true structure higher low until the higher high is made. And once the higher high is made, we have to look back and say, okay, what is the lowest point of the entire retracement move? Well, this is the lowest point. So this has to be the structure higher low. So what I'm trying to illustrate to you here is that the reason why this is complex structure and specifically complex retracement is because the retracement is the complex part of it.
I got it.
You got it? Cool.
Yeah, I think that made more sense.
So bearish complex structure with the complex retracement is the exact same thing. We have a structure high down to a structure low. This is very clean, no complexities behind it. As we get into the retracement, we don't get a clean push. We get this push. Ideally, we want to see this and then this, but that doesn't happen. So I'm illustrating here that this is what makes this complex structure, more specifically complex retracement. Does that make sense?
Yeah, I have a question though.
Go for it.
If you were trading right here, you would just wait for everything to happen and then for the lower low to break structure from the low and then you trade?
When it
Or
comes to actually
when
placing trades, this is where I always say you truly never know. All you can do all you can do is take high probability setups. And I know here I haven't got to the point yet to show you exactly where I would trade and why I would trade it. But for example, one key thing about trading is the fact that you never know truly where price is gonna go. So it's important for you to have a plan on cashing out pretty much, or putting your stop loss at break even, or taking partials, whatever that works best for you. Me personally, I'm the type of person where I want to close the full position whenever I can. I don't like to take partials. But what I do is if I get into profit at a certain point, I will put my stop loss at break even. So I bring it up because you have a good point. If I take sells, again, I don't see this yet. I'm saying, oh, I think this is a high to a low, and I think price is giving complex structure. I'm going to sell here, and I think price is going to make a new lower low. So what I do is I take a sell, but if you notice, prices goes in my direction a little bit, and then stops me out. So when I take that trade, I truly never know if that is actually going to be the lower high. So what I do is when I get in profit, because again, there's an opportunity to get in profit, I put my stop loss to break even at some point. So if price does stop me out, I don't lose the trade. And then I can enter again for a sell here. Because ultimately my bias is that price should make a lower high down to a lower low. So I want to catch the lower high. And again, there will be reasons why I may not take a trade here and not take a trade here, but I do here. And that's another lesson. But for now, let's say we don't know that. We want to take a sell here. That's still a valid trade. Still a valid trade. And then finally it hits here. So to answer your question, you truly never know. But based on your risk management and your way of protecting your capital, you could still trade this and be just fine.
All right.
Complex structure with a complex continuation. So here looks a little funky, but break it down. So to break this down, we understand that this is a low to high, right?
Yep.
Yeah.
Cool. Price gives a nice retracement, no complex retracement. And then price, in this case, actually gives a complex continuation. Ideally, we want to see one big push here, and that would be very clean. This will be a low to a high, and that'll be my new structure range. But obviously, in this case, price gives a complex continuation. There are multiple highs and lows within the continuation leg of structure. Well, how do I know which one's the higher low, which is the higher high? Well, once price makes the higher high, we understand that the structure higher low must come from the lowest point of the retracement. And the fact that this is the retracement, the fact that we know this is the retracement, what is the lowest point of the retracement? Well, it has to be here. And this can't be a structure higher high because it is not higher than the previous high. This can't be a structure high because it is not higher than the previous high. This right here is a structure higher high because it is higher than the previous high. So therefore, these highs have to be internal structure and these lows have to be internal structure because the lowest point of the retracement was down here, so these lows can't be it, and these highs actually never made a structure higher high, so they can't be it either. Do you guys do you guys get that? Do you guys want me to try to reword it?
Yeah, so when I was talking about, so when you break over the last high, creating the higher high, so you know it's gonna be a retracement. So you would place the trade right there, saying it's gonna sell. That's what I was talking about.
You can place a sell here to cast a retracement for the buy. I personally rather wait for the buy since I'm in bullish structure or an uptrend. I want to go with the trend. But technically, if you take a sell, yes, you could catch a sell here. Absolutely. The issue here is price could easily do this and then do that, meaning you don't know exactly when to take your profits. If you take a buy here, you know you should be taking profits at this high because you're anticipating anticipating price to make a new high. Or if you take a buy down here, you're anticipating price to make a new high, so you would take profits at this high. When you take a retracement, you're kind of in no man's land because you don't know how far price is going to retrace. You can take it, sure. If you want to take a sell here, sure, or a sell here, sure. But I'd rather take the buy and catch the overall move.
Yeah, so just follow the trend pretty much.
Yes, that's what I would recommend. But absolutely, yes, if you make a new higher high and you want to take a sell because you're anticipating a retracement move to come to play, that's perfectly fine. Nas, does this do the explanations help you out? Are you getting it?
Yeah, I think I'm getting the concept of the complex structure and the retracements and finding the higher high and lower lows. I think I get it.
Okay.
I think I get it. Do you have any examples of an actual chart of this, like an actual like?
Yeah, and I can show charts again. Yes, I will add more chart examples. I'm just trying to get the fundamentals down first, so you understand the concepts.
Right. Yeah.
Yeah.
I think I get that point of view.
Yeah.
If you had any like actual like real life examples, that
I
would
think
be.
I have them. I have some down here, which I'll go over as well.
Oh, okay, cool. Yeah, then I think I get the concept though.
Cool. And yeah, and just know that once you understand the fundamentals of it and have a good foundation, you'll be able to apply these rules and be able to check, okay, is this actually a structure high? No, it's actually internal because of this rule. Or this is actually a structure high because it's higher than the previous structure high. So it has to be a structure high. So once you understand the rules, you'll be able to apply it anywhere because ultimately the charts will always vary. There will always be different variations and you'll never get the exact same setup ever because there's so many factors and so many different ways that a candlestick can close and just so many different variables that you will never see the exact same move twice. And sometimes they call it a snowflake. Any snowflake you put under a microscope, it will have its own complexity to it. It is still a snowflake, but each snowflake is unique to itself. Does that make sense?
Yeah.
So the opposite, we have a high to a low. That's within the range. So I can even draw this out as the range. Price breaks underneath. So this has to be a structure lower low because obviously it is lower than the previous low. Well, where is the structure lower high? Well, it has to be the highest point of the retracement. This whole move is the entire move of the retracement. What is the highest point? Well, it has to be this. So therefore, your new structure range will be from here to here. Anything in between has to be internal structure. And it's internal structure because this low is not lower than the previous low, so it can't be a structure lower low. This low is not a structure lower low because it's not lower than the previous structure low. And these highs, these can't be structure lower highs because we understand that it has to come from the highest point of the retracement, which we already established is here. So these have to be internal highs. And then the same process continues. You have a high to a low, price pulls back. This is very clean though, no complexities, makes a new lower low. This is your new structure range. You guys got it?
Yeah.
So here, complex structure with a complex retracement and continuation. So I showed you examples of a complex retracement only and complex continuation only. They could come together at the same exact time. So here, complex, bullish complex structure, a complex retracement and continuation. So here we have a low to a high. If you notice, we have complex retracement. That'll be the whole retracement move. And we have complex continuation. Do you guys see how those are both complex now, not just one?
Yeah.
And to help you guys out, the red represents the retracement, and you can see there's multiple highs and lows. It's not just one push. The blue represents the continuation. There are multiple highs and lows, not just one. So therefore, both the retracement move and the continuation move were both complex. Same rules still apply. When you have a low and then you have a high, this will be your structure range. Price eventually makes a new structure higher high. Well, how do I know where the structure higher low is? Well, it's going to be the lowest point of the retracement. The whole retracement is represented by the red arrow, and this is the lowest point. So therefore, this is a structure low to high, structure low to high. Everything in between is nothing but internal structure.
Can you define retracement for me again?
Sure. A retracement is going to be the bearish move within a bullish uptrend or bullish structure. In this case, we're talking about just bullish structure. In bearish structure, it's going to be the entire bullish move within bearish structure. So once again, a retracement, we understand that we are in bullish structure. Price should go up. We have a low to high. All this price movement is going downwards before price goes back on up. So this downwards move is a retracement. And in this case, it's a complex retracement because there's multiple highs and lows within it. But essentially, the retracement is the bearish move within bullish structure.
So, so if you got a bullish structure, the bearish move would be another retracement. It's just like opposites.
Yes, if you are in bearish structure, the bullish move will be the retracement. The retracement is just when price is going the opposite direction of structure or the trend.
Oh,
So in
okay,
bullish structure,
okay.
yeah, so you're anticipating in bullish structure price to go up, right? So if you get down movement, that will be the retracement.
Okay, so it's just it's just going against the grain.
Correct,
That's what,
absolutely.
When you notice that that's the retracement.
Correct. So you can go against the grain or you can try to go with the flow, which is the continuation. And that's why I say, yeah, you can take retracement moves, but do you want to go against the trend, against the grain, or do you want to go with it? I personally rather go with it.
Okay. So you like retracements or you don't?
No, I don't want to trade retracements. You can. I'm not saying
Okay.
don't do it, but for the reasons I gave you, of just not having an ideal target because you don't know how much the retracement will retrace, and also the fact that it could be a shorter move. Typically, continuation moves are the bigger moves, so I typically would rather catch the bigger move.
Could you rephrase it a different again?
Got you. So, if I'm in an uptrend, bullish structure, and I'm anticipating price to give me a retracement, you would understand that this is a retracement, right? This part here.
Right, because it's bullish and then
Correct.
it went down.
Correct. You're going against the grain, going against the bullish uptrend. So when you take the sell,
Yes. Okay.
if you were in a sell here, if you were in a sell here, well, where would you take profit? How would you take profit?
You would take profit at the bottom of that like yeah, that what is that called again?
It's the structure low
The
right
take
here.
profit line. You would take it at the you would take it profit at the structure low if you're putting in a sell in this um retracement. So since it's going up, so it's bullish, you would take profit at the structure low.
Okay, so you take profits at the structure low, correct?
Right,
And now in
because
this
if you're putting
case,
it, you're selling it, right? If you're selling it.
correct, you'll be selling it. You're expecting price to come down and hit the structure low. In bullish structure, aren't you anticipating a structure higher high? My bad, a higher low?
In the bullish, you were expecting a higher high, well,
Correct.
a structure high, right?
Correct. Are you also expecting a structure higher low? In bullish structure, isn't that made up of higher highs and higher lows? Meaning, if I draw it out, I know I'm asking you the question verbally. I know you need some illustration. Aren't you anticipating for this to be a low to a high? And if we're in bullish structure, price to continue going upwards, correct?
Right.
So,
Yeah.
so if you're anticipating price to continue going upwards, aren't you anticipating price to make a higher low and a higher high?
Yeah.
You want the higher high and higher lows, because that's an uptrend. In this bullish structure, if you would you would want the lower low and lower lows for a bearish if you're trying to sell it. But if
Correct.
you're in a bullish structure, so you got the uptrend, um, you would want to buy.
Correct. And in an uptrend, we're looking for higher highs and higher lows, correct?
Yes.
So if you're looking for higher highs and higher lows, why would you take profit down here? Aren't you expecting price to
How
make a
you would
higher?
take profit down? You would take profit down there if you're trying to sell it.
Correct. So let's imagine we're in a sell. Why would you take profits down here if you are anticipating price to make higher highs? Because we
Well,
understand prices
if
in
you are
bullish. Go ahead.
right, if you are wanting to, if you understand that it's in bullish, then you probably wouldn't want to sell it then,
Exactly.
right?
You probably wouldn't want to do that. So that's why I'm showing you here. Yes, you
So
can sell it. And my first
but you wouldn't
question,
want to.
correct.
Oh, okay, I get what you're trying to say. You trying to, you were just like questioning why I would want to sell it if there's a bigger play there.
Correct. It's not wrong, but the bigger play is the buy move. Why would you want to go against the grain when you can
Oh,
go
okay,
with it? And
so
my
that's why you were
biggest
saying, you don't do like the double plays because um, you really don't know how fast it's going to go back up, but you do know it's going to go up at some point in time. So you might as well just wait for the uptrend and to take a bigger profit instead of kind of just playing with the money.
correct. And my biggest issue when taking retracements, not that you can't do it, there are definitely pips to be caught because as you can see, price does move down. There's an opportunity to get money. But if you're looking to take profit some point, where are you going to take it? You know, and my thing is when you
You
take a
don't know yet
retracement,
for real.
you don't know how far price is going to retrace. But when you take a buy, price comes on down here and you're looking for a buy here, where would you take profits at if you place a buy?
You would take profit at the the structure high,
And why would you do that?
because that's where that's where it's heading.
Exactly. Those are what you're
You wanna take profit.
anticipating, right? We're in bullish structure. You're anticipating a
Yeah.
higher high, right? So this is
Yeah.
why I rather take buys and do this because you have a solidified, I won't say solidified because obviously anything can happen, but what I'm trying to say is you have an ideal target of what you are shooting for because you are anticipating a higher high to be made. So this will be a great area to take profits.
Oh, so you dropping jewels. That's
Ah,
crazy.
ah.
Wouldn't you take profit over that since you know it's gonna go higher?
Yeah, you could do a little bit over. That's fine. At that point, say you do this though, you're like, I think it's gonna go up here, but then price does this. Well,
Yeah.
technically, it made a higher high. It just didn't go as high as you wanted it to be, and that's just your error at that point. So it just depends on how you want to do it. You know, if you want to put a little bit over, that's fine. If you want to put it right at it, or maybe you're okay with taking profit here. Maybe the risk reward is good for you here. But ultimately, this will be the ideal target.
So going over it's pretty much just gambling it.
Yes, because you don't know how far price would go. If anything, say price goes above it, and then I can't really drag my stop loss here, but let's imagine this is my stop loss, right? Let me delete some of this stuff. This green line is my stop loss. You guys see that?
Yeah.
When price gets up here, right, could drag your stop loss up here and have a stop profit, meaning if price comes back on down, you close out your profit. Price wants to just blast off to the moon, then you can run with it that way. So that's one way of doing it too. But yes, if you don't close it and say you put your stop loss to break even, you grab your stop loss and then do this, could happen is you made all this profit and then price comes on down, hits your break even, and you don't win any money. Yeah, you don't lose any, but price hit your take profit, you should have taken the money. So yes, if you keep holding it, it does turn into a gamble. I would say if you move your stop loss to your take profit entry, then it's not, I mean, you are continuing to gamble, but you're guaranteeing that you're getting the money from your take profit one.
Okay, I get it.
So here I break this down on why complex structure is important to understand, because again, a lot of retail traders lose, and I'm going to break down some strategies people use and why they fail and how to avoid them. This is a lot of information, so I won't break it down exactly to its extent because I know it'll take a lot of time. If I need to go ahead and ask questions, I will answer them for you like I have been. But hopefully as I talk about it, I can explain a little bit better and you guys get a better understanding. So expectation versus reality. A lot of retail traders will not understand that in bullish structure, a structure higher low is not a structure higher low until it creates a new structure higher high. Instead, they mistake an internal higher low as a structure point, and once price breaks underneath as a lower low, they will perceive it as a bearish break of structure. Traders may also not understand that in bearish structure, a structure lower high is not a structure lower high until it creates a new structure lower low. Instead, they mistake an internal lower high as a structure point, and once price breaks above as a higher high, they will perceive it as a bullish break of structure. In the following examples, you will be able to see how reading structure incorrectly will affect your perception of structure direction. Most of the time, you will have the expectation that structure was broken and going one direction, but when in reality structure never broke. Remember to follow all of the rules or you may get lost in the true structure of the market, as many other retail traders do. So to sum it up, a lot of people don't know how to truly identify structure. So what happens is they get confused between internal structure and the true structure points. And I'm going to show you some examples of how that could be dangerous. I won't say dangerous, they just hinder you from being profitable. So bullish complex structure expectation example 1. So in this case, I'm showing an example of somebody that does not understand internal structure and they think every point in the market is a structure point. So here they would have a low up to a high. Price makes a higher low because it is higher than the previous low, but then price makes a lower high because it is lower than the previous high. And if you notice, price makes the lower low. Here, they would say, hey, I'm in bullish structure. This is my most recent higher low. Price made a lower low. Well, therefore, even like I tell you guys, in bullish structure is broken when structure makes a new lower low. But the problem here is this higher low isn't a true higher low. I would tell you guys that is internal structure. So when price makes this lower low, somebody that does not know that rule, they will consider that a break of structure. So what they do is they say, oh, it's a downtrend. Let's sell. It's bear structure. Let's sell. So if you notice, they may take a sell here. They're thinking this lower high is going to lead to a lower low because they're in bear structure. But what they failed to realize is that when they take the sell, they were always in an uptrend. They were always in bullish structure because this low up to this high, this range was always maintained. So when you take this sell, they don't understand that they are selling the retracement. And matter of fact, in this case, they're actually selling the continuation move, and obviously they get stopped out. They fail. So maybe before I try to draw some examples, do you guys get what I'm saying?
Yeah.
You're a little low. What'd you say?
Say you were just saying that people get confused with like the internal structures and um, mistaking it for like the entire structure of that move.
Exactly. So they failed to realize that this whole move down is the entire retracement. I think those are structure points. So when price makes a lower low, they say, oh, break a structure, we're bearish, let's look for sells. But they failed to realize that price is within the range. Price is still in bullish structure. They should be anticipating a higher high. Here, they anticipated a lower low. They thought this will happen, but in reality, this is what happened.
Right. I think.
And actually, I probably was a little hard to understand because once again, you don't see my cursor exactly. I keep thinking you guys see my cursor. So once again, they see a low to a high. They consider this a higher low. We understand that this is not a higher low because they did not create a higher high, but they will not know that and call this a higher low. And this will be a lower high. Then price makes a lower low. Well, by definition, price is in bullish structure. Bearish breaker structure happens when price creates a lower low. So in their eyes, they think that this is a breaker structure because price made a new lower low. So in this case, they think price is in a downtrend. So now they're doing this. They see low, high, low, high. So what do they want to do? They want to sell. They think price will make a new lower high and make a new lower low. So that's why they sell. But when they do that, they fail to realize that price was still within the range. Price was just given a complex retracement, and now they thought price would drop, but in reality, price went to the upside. So to draw it even here for you guys too, prices was in the range. So all these points are internal structure points. They were never true structure points. So when they see this break, they fail to realize that price is still within this low to high. Yes, once price breaks this low, this is a true breaker structure, but the whole point is before this happens, they're anticipating price to continue to do this and keep dropping down. But they fail to realize the bigger picture, the true structure point, which is this, true structure points. So when they think price is going to keep doing this, they fail. They lose the trade. Does that make sense?
Yeah.
Could you rephrase it one more time for me?
Absolutely. Would you agree here that this is a structure low to structure high?
Yeah.
Cool.
Yeah. Right. Right.
So we know that based on our rules. Would this be a structure high or low?
Yeah.
Why would it be a structure high or low?
Which one?
This one right here.
Wait, which one was it?
This orange one.
Oh, you said would that be a structure high or low?
Correct.
Is that what you said?
Yes.
Yes, it would.
Okay. Why is that?
I don't know. No, I'm gonna say no.
Why would you say no? And it's okay if you
Because the
don't
structure
know.
not done yet.
Okay, what do you need to see to confirm a structure high or low?
Wait, no, it is a structure. It is a structure low because it hit the structure high,
It hit the structure high, this orange one?
right? Right, because you marked the structure high right there, and then the structure low would be that retracement point right there, right? Am I tripping? I'm tripping.
No, you're good. You're good. So we confirm that this structure low and this structure high are the structure points, correct? We know that for sure, right?
Yeah.
Yeah.
Okay. So why is this structure low? How do we know this low is an actual low? Is it maybe because it made a structure high?
Yeah.
Right.
Gotcha.
Because it made the structures high, right?
Great. So this one, is this a structure high or low?
No.
Why not?
Wait, yeah.
And don't worry, I'm just quizzing you guys to really see if you guys truly grasp it, and it's perfectly fine. There's no rush, no nothing. I'll backtrack one more time. This structure low, we understand that it is a structure low because it led into a structure high, correct? You guys with me?
Yeah.
Okay, so we understand that the structure low is a structure low because it created a new structure high. So keeping that same logic, would this be a structure high or low?
A high.
You said a high?
Yeah, lower high now.
You're talking about this orange one, or we're talking about the orange one right now?
Yeah, the orange one.
Great, so you're saying this is a lower high.
Yeah.
Okay, Nas, what do you think?
I think that's the new structures. I don't even know. I don't know.
And that's
I'm
perfectly
not
fine.
confident. I don't know.
Yeah, that's perfectly fine. So obviously some things are easier for me that are like kind of seem like they would make sense, but you guys are testing my teaching abilities, which is perfectly fine. I need that. I want to be a better teacher. So first going off with Andreas right here. This right here cannot be what you call it, a lower high. Yeah. So
Yeah.
these here are lows. These here are highs. And I guess the best way to put it, everything to the upside, these have to be the highs. And everything to the downside, these have to be lows. So when I'm drawing this for you, and actually maybe let me do it the opposite for you, it might help out a bit more. So I did draw the uptrend. I'm also drawing the downtrend now, but you see on the downtrend, these would be the highs and these would be the lows. The lows are at the bottom, the highs are at the top. Does that make sense?
Yeah.
Cool. So then if we keep that same logic in mind, I know I'm drawing a bunch of different colors here, but what did I draw? I drew this. If you take a look at what's going on here, these are highs and lows. Wouldn't you agree that this would be a high by the same color?
Yeah.
And then these would be the lows.
Yeah.
You get what I'm saying? So this right here couldn't be a lower high. Relative to the previous low, this is a low. You could argue, well, it's a higher low because it is higher than the previous low. And then you could argue that this is a lower low because it is lower than the previous low. You could argue that. This right here, there's no way that this could be a high. These have to be the highs at the top side. That kind of clear up some confusion.
Yeah.
So the highs are always to the top side. The lows will be to the downside. You guys good on that part?
Yeah.
Cool. So what I was trying to get at, back to the same scenario. So we understand that this is a structure low to a structure high, correct? And we
Yeah.
would say that this low is a structure low only because it made a structure high. Would you guys agree there? Or do you guys want me to explain that a bit more?
You could explain a little bit more if you want.
Okay, so I'll go ahead a little bit forward to kind of give the answer and backtrack. What I mean by that is eventually prices in an uptrend or bullish structure, we would anticipate price to do this, correct? So here we understand that this is the higher high. You guys with me so far?
Yeah.
So how do we know where the structure higher low is?
Bottom of the higher high.
Bottom of the higher high. So you're saying this?
Because the structure high previously was the one that you put the line across to,
Correct.
and now the new higher high is the third one right there.
Correct.
So
This is the new one.
Right. So the lower one will be the lowest point. So it will be at the bottom of the new high.
Gotcha. And you're very close. The lowest point of the retracement, right? And this whole move is a retracement, which I'm assuming when you're saying the bottom, you're talking about this. Is that what you're saying?
Wait, where's your crosshair at?
You see my my
Yeah.
orange? This orange? Are you talking about this one?
Yeah, I am referring to that.
Gotcha. Like you said, it has to be the lowest point of the retracement. And this whole move right here is a retracement. What is the lowest point? Is this the lowest point? No,
Right.
because this one's lower. Is this
Right.
one the lowest point? No, because this one's lower. This is the lowest point. So therefore, this has to be a structure higher low up to a structure higher high, right?
Right. That's what I was saying. Right. Or is
Exactly.
That wrong?
No, you're good. I'm just making sure we're on the same page.
Oh yeah. That's what I was saying. Yeah, that's what I was.
Correct.
That's what I was saying.
So here, that's my new structure higher low up to a higher high. And so these points, what would you classify these? What would those be?
Those are the low highs.
Which are, starts with an I.
I don't remember the word.
They'll be the internal structure points. Internal structure
Internal structure. Oh,
and the true structure points are
Sorry.
different. And to kind of
Right.
help Andreas out as well,
Sure.
these right here will have to be the highs. These are internal highs. And these right here will be the lows, the internal lows. They are not structure lows and they are not structure highs. They are internal lows and internal highs. We already identified the true structure points based off what we just did right now. The true structure points, especially now, would be this low up to this high. This is our new range right now. Are you guys with me?
Yeah.
yes.
So it's important to know the difference, because if you don't know the difference, this is what happens. Same scenario. We understand that this is a low to a high. So at this point, are we in bullish structure, bullish uptrend, or bearish structure, or downtrend?
Downtrend?
We're in a downtrend? Why do you say downtrend?
Wait. No. We're in an uptrend, and that's the internal. I forgot what it's called.
Internal structure?
Yeah.
Okay. Nas, what do you think? Are you in uptrend or downtrend?
I think we are in a uptrend, and those points are the retracements.
Exactly. So you guys are both right. We are in an uptrend. Those internal structure points is what is creating the retracement. So you guys both got it right, and you guys are helping each other complete the full point. So at what point
Bet.
do we know the higher low is created? We understand right now that they are internal structure points. When do we know the true structure higher low is formed?
When it goes past the old higher high.
When it goes past the old higher high, so something like this.
Yeah. Right.
Because it's
or,
higher.
Right. Or if it goes past the lower low, if say, it could do that, right?
Correct. At that point, what would that be? If it does go underneath the low, the previous low, the structure low.
So then just the structure flipped and turned bearish.
Exactly. So you're getting ahead of the game. That is in the next section, which is a break of structure with complex structure. But without getting ahead of the game, let's stay with structure.
on the higher high. Oh, my
Correct. You
bad.
had it right.
Okay.
You understand that a higher low is created when it creates a higher high. And you understand that it is when price, or it's the lowest price point of the entire retracement. You guys with me?
Yeah.
Cool. So
Right.
you guys understand the true rules of structure. What happens is not everyone has the knowledge you guys do now, and they get confused, just like how you guys were a couple minutes ago. What they say is they say, "Oh, this is a structure low, this is a structure high," and they say, "You know what? This is a higher low," and they say, "Oh, this is a lower high." They're not distinguishing the difference between structure points and internal structure points. They just think everything is structure. So here, could you see how someone would classify this as a higher low? Because
Yeah.
obviously it's higher than the previous low. You guys understand that it is not a structure higher low, and that's how I should clarify, put structure in front of it. You guys understand that this is not a structure higher low because it did not create a structure higher high. Some people don't know that, and they confuse the two between true structure and internal structure. And they say, "Oh, this is a structure higher low, and this will be a lower high because it's lower than the previous high." When they get here, they will classify this as a lower low. Could you see how someone would do that?
Yeah.
And so
Yep.
here they're saying, "Oh, here's a low to a high," and they know that they were in a bullish uptrend, bullish structure. And what happens is they see price break underneath. And when price makes a new structure lower low, they think it's a break of structure. Now, if they think it's a break of structure, would they think it's now a bullish structure uptrend or bearish structure downtrend?
If it breaks structure, which one was breaking structure? That which one were you with the cursor on again?
So here we understand that people could see this as an uptrend, right? Just here without looking at any of
Right.
this.
Type, yeah. And that red, that you talking about that red line, they would think that's a breaking structure, so they would probably think
Correct.
it's, they would probably think it's switched, but
Exactly.
it didn't because it didn't go past the lower low yet.
Exactly. So here they're looking at this and say, "Oh, it's an uptrend, higher highs and higher lows." And they go, "Boom. Oh, look, guys, it's a structure higher low because it's higher than the previous low." And then they go, "Boom. Oh, look, guys, it's a lower high because it's lower than the previous high." And then price makes a structure lower low in their eyes. So like you said, they would think it's bearish structure. You guys with me?
Yeah,
Yeah.
and then they would try they try to sell it, and then all of a sudden three more moves, and then they just lost $1,000.
Yes, sir. Andres, did you say yes or no?
Yeah.
Okay.
I get it.
Got you. So yes, exactly. Now you're getting the point. You're hitting it around the head. They want to sell it, and maybe they catch that sell move, sure. But then even here, they're gonna say, "Oh, lower high, lower low. Let's sell it again." And what happens is price does that, and they get stopped out, and they don't know why. Price was always in bullish structure. From here, price was always within this range. All this was a complex retracement to continue to go bullish. So understanding the difference between the two is important to understanding structure itself. If you get confused, you can see how easily you could get confused.
No, I definitely would have got confused. Them TikToks, people that be trading, they was like, I just made $2,000 or something like that. I'd be like, what I'm looking at? But now I understand what they be talking about.
Yes. So that's what that is. Any more questions on that part so far?
No.
Cool. Another example, but flipped, somebody will consider this a break of structure. You guys have the understanding that this was never a break of structure. It was just a high to a low. And when they thought the break of structure came into play, they decided to buy. But in fact, it was only retracement. And that's why in the reality example 2, you can see that buy failed and price made a lower low. They would have known exactly how to identify structure properly. They wouldn't have taken that buy. Make sense?
Yeah.
Here's just some other examples. If you guys want me to break each down, that's fine with me. But if you guys get the gist of it now, we can move forward. But that's up to you guys. If you guys want me to break these down as well. But ultimately, their expectation is a break of structure happened. But if you follow the rules properly, you wouldn't have got faked out like they did. You guys want me to go over some of these ones right here?
I get it.
I think I get it.
Okay, so now we'll go over complex structure from a bank perspective. Complex structure from a bank perspective is very similar to what you already know about structure. When you get a complex retracement or continuation, it is simply structure on a lower time frame. This structure is formed as banks buy or sell the market to create the retracement or continuation leg of structure. Remember, the market moves in a fractal manner on all time frames. I think that should say fractal manner, not matter. Bullish complex structure. If the market is in bullish structure, you may see a complex retracement. On the higher time frame, it will most likely consist of internal lower highs and internal lower lows, almost appear as a downtrend. On the lower time frame, it will most likely be bearish structure, consisting of structure lower highs and structure lower lows. Banks are selling from a fractal perspective, so the market can give the retracement move so they can eventually buy again. You may also see a complex continuation and almost appear as an uptrend. On the higher time frame, it will most likely consist of internal higher lows and internal higher highs. On the lower time frame, it will most likely be bullish structure consisting of structure higher lows and structure higher highs. Banks are buying from a fractal perspective so the market can give the continuation move. No, that was a lot. I will draw it out for you guys. What I am trying to say is on the higher time frame, you may get that complex retracement, right? This on this time frame, say this is the 1 hour. We understand that this is a high down to a low. These are the structure points, and all this is internal except here and here. But remember, when you zoom in, you get more details. You get more candles. You start to see more highs and more lows. So what I'm saying is on a lower time frame, most likely what you'll see is, I know this isn't as pretty as I thought it would be. But my whole point is when price makes this move down, can you see how in lower time frame it may look like this? There's going to be more candles and more noise. But this move is still this move. You guys with me so far?
Yeah.
Okay. And here, this move on a lower time frame is this move. You start to see more details. You have more candles. There's more noise. There's more ups and downs, highs and lows. But it's the same move. You see this move on the higher time frame. This is the move on the lower time frame. Same move, just more details, and so on and so forth. So when you start to see this complex retracement, most likely, if you notice on the lower time frame, this is a high down to a low, right? And this is a high down to a low. Price makes a new higher high. We were in a downtrend. Price breaks structure here and makes a higher low to a higher high. So on the lower time frame, this is actually bullish structure. On the H1 time frame, the higher time frame, this is all internal structure because it never broke this high. But on the lower time frame, it did. So what I'm trying to say is, from a bank perspective, I haven't got into the buy and sell orders just yet, but I should just say from a fractal perspective, the lower time frame most likely has already broken structure, and that break of structure on the lower time frame is what is causing the retracement on the higher time frame. The lower time frame break of structure has to happen in order for price to give the retracement. So on the higher time frame, you can see that. Is that kind of making sense?
Yeah.
Yeah.
Okay. And
What charts do you like looking at more? The ones with the less, with more pips, or the ones with less?
I just look at the chart that looks the cleanest to me. Whichever one I can read the best, that's the one I want to trade. I don't really look at pips or things like that. I have a handful of pairs that I do look at, but ultimately what I decide to trade is based off what looks the cleanest. Got you. So stick with me here. Hopefully as I keep talking, it'll make more sense. But ultimately what I'm trying to say is the higher time frame, when you get a complex retracement or even a complex continuation, most of the time when you go down to a lower time frame, it just directly represents break of structure on the lower time frame. And to get to the second part, banks are selling from a fractal perspective so the market can give their retracement move so they can eventually buy again. Or banks are buying from a fractal perspective so the market can give the continuation move. What I'm trying to say here is that, so for both these examples, we understand that price is moving downwards, right?
Yeah.
So if it's moving downwards, we know that banks are selling, correct?
Yeah.
So when price gives a pullback, what I'm trying to say is, let's look at this example. We understand that both these charts are the same, except the right is on the lower time frame showing more details. When price breaks structure here, we have a lower high down to lower low. Now we have a higher high, higher low, higher high. This break of structure, this act or this event right here is from the banks wanting to buy. And I say buy because they were selling. They had a lower high, lower low, lower high, lower low, lower high, and lower low. We understand that their intention was to sell. But when price gave a higher high and gave a break of structure, their intention was to buy. But we have to understand that their intention was to buy so they can drive price back on up so they can sell again. That's why this price up here is just so they can drive price back on up to sell again. So the complex retracements in this example are so the banks could sell again. And from a fractal standpoint, from a lower time frame, the banks broke structure. Again, they were selling because, again, we understand that overall they are selling. But at some point, they have to take profits off of their sell orders so they can actually cash out. When they take profits off their sell orders, we understand that there has buy orders that flood the market. As the buy orders flood the market, it breaks structure. And in the process of that, they make money on the way up. They say, you know what? Okay, we took profits off ourselves. Let's take some buys. They're making money on the way up by buying the market. But they are buying the market so they can get price back up higher so they can sell again. So they are the ones moving the market. Everything has a reason for it. And the reason why this retracement comes into play is so they can move price back up higher before they sell again. And kind of show you some images. Remember here, bullish structure on lower time frame. This is how obviously just bullish structure looks. Bearish structure, we understand that the banks are selling. So when you get to bullish complex structure, you understand that price, the banks were buying from this strong low up to this week high. Within the retracement is lower time frame bearish structure. So lower time frame bearish structure is right here, and they are selling. They're selling the market. But then they get to a point where bullish structure, you understand price is creating higher highs and higher lows. Banks are buying. In bearish structure, we understand that the banks are selling the lower highs and lower lows. So going back to say complex structure, you understand that the banks are buying here. And eventually after this retracement move is done, buy again. But within it, you can see here, retracement, lower time frame bearish structure. So the retracement on the lower time frame is bearish structure. So when I go down to here, what bearish structure is, banks are selling. And going back to this one, as the banks are selling, they are making money off the retracement. Not only that, but they will also drive price back lower just so they can buy again. So banks move the market as they please, buy up, and they also sell on the way down. And they are constantly moving the market, and they have a plan for everything pretty much. Is that making some sense?
Yeah.
Yeah, I think so.
So what I'm trying to show you here from a bank perspective, those complex retracements and complex continuations, they're there for a reason. It's just banks' way of moving the market. Obviously, if they want to push the market up, they got to buy it. They want to push the market down, they got to sell it. And typically, when you see those complex retracements and continuations, they are structure points on a lower time frame. You may not see the structure points on the higher time frame. It may take you some time to get down to a certain time frame to see those structure points, but they are there. That makes sense?
Yeah.
Yep.
Examples of complex structure on the charts. There are many variations to complex structure, but here are a couple examples you may see. Always make sure to follow the rules. If for some reason structure is hard to see, try to find a time frame that looks the best to you. So what I mean by this is, once again, it'll always come in different variations. I can sit here and show examples upon examples pretty much forever, and then you'll go on to the chart tomorrow and it'll be completely different. There'll always be different variables. But if you stick to the rules and you understand your rules, you shouldn't have a problem figuring it out. There will be times where the charts are very ugly and you can't really decipher what structure is. So I recommend one or two things. Find the time frame that helps you see it the best, or just don't trade it. There are times where I look at the chart and I say that is completely choppy, it's ugly, and it doesn't make sense to me. Move on to something else. You don't have to force anything. Too many opportunities to too many opportunities in the sense of pairs to trade, or not again, I haven't said this word. The market's here to stay. It's not going anywhere. It's not like you have to take a trade today. There's always a tomorrow. So don't force trade today because there may be a better setup tomorrow. And don't worry if you miss a trade today or you miss a trade for the next week, because guess what? The following week, the market's still going to be there. The opportunities are still going to be there. So don't force anything pretty much.
When you say move on, do you just like move like to a different trading pair? Or
Yeah, that
just,
could be it.
move on to like some different entire like you only trade forex, so it would just have to be a different currency pair.
Yeah, it could also be, I also trade like gold and I trade US 30. You can look at, the S&P 500. You can look at things like that. I just personally don't look at those. I just don't do like options. I don't do stocks. You can trade indices and metals and forex pairs still. You get what I'm saying? Like me personally,
Right.
if I'm looking at US 30, this isn't a forex pair. I could still trade this. And I do. My broker allows me to trade it. And when you look at a prop firm, most of them advertise for forex, but you can still trade things like US 30, the S&P, gold, and pretty much whatever you want. Trade crypto, trade some Bitcoin. I don't dabble in all of that. I just stick to a couple pairs. My typical pairs are US 30, gold, and GU. Those are my three main pairs. Bullish complex structure. An example of bullish complex structure, you can see the structure higher lows and structure higher highs. Within them are some internal structure points. It is important to remember that a true structure higher low will be the lowest point of a retracement and leads into a structure higher high. So to zoom in a little bit, this will be a great example of you have multiple highs, multiple lows. Where's my true structure? Where's internal structure? And blah, 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 blah. So using the same rules. And also I use the wicks. So this is a good example of the difference between line charts, which are great to understand the concept, but it doesn't have the wicks. It doesn't have all the extra noise. So simply put, you can see there's my structure low to a high. Then price makes a new higher high. Well, where is the lowest of the retracement? Well, it has to be this not internal. It has to be this higher low. All these little wicks and all these little ups and downs are my internal structure highs and lows. Same process comes into play. Price makes a higher high. Where is the lowest point of the entire retracement? Well, it has to be this, and I'm going to use that very bottom wick. I'm not going to use the other wicks around it, but got a low to a high. Price makes a higher high. Well, where did it come from? It came from this higher low. So this right here is my true structure points, or my structure range from here to here. Everything in between would be internal structure. All these little wicks, this wick, this wick, this wick, all that little stuff are all internal highs and lows. Same process continues. Price makes a new higher high here. Well, where did it come from? The lowest point of the entire retracement. This is it. I use the wicks. I won't use this wick here or this wick here. I won't use the candlestick closure. I use the bottom of the wick. And then from here, that is my new structure, low to high. Process continues. Made a higher high here. Where did it come from? Came from down here. That is my new internal, my bad. That is my new structure range, not internal range. Everything in between is internal structure. Same thing here. It's just flipped. You can see how this is my range. Price makes a new low. Where did it come from? Well, it came from here. This is my new range. Price makes a new low. Where did it come from? Well, it came from here. Price makes a new low. Where did it come from? Makes a new low or I forget what I just said right now. Price makes a new low, breaks outside the range. Where did it come from? Came from here. That's my new range. Everything in between, all this extra noise, all internal structure. So I'm not getting confused on what my true structure is. Because if I don't know the difference, then yes, as you have noticed, it gets confusing. You think you're in an uptrend when you're in a downtrend. You think you're in bearish structure when you're actually in bullish structure. Does that make sense?
Yeah.
Any questions?
No. Do you look at it like this every single time you take a trade?
Yes, I always identify my structure. You have to. You got to know if you're taking a retracement trade, taking a continuation trade, anticipating where to take your take profit. Are you anticipating price to continue going up, go down? It's definitely part of the plan for sure.
Maybe that sounded better in my head. I was trying to ask something else. I'm sorry.
No, you're good.
Um,
Go for it. There's no rush.
well, maybe do you look at it at the bank's perspective every single time you take a trade? Maybe is that what I'm
Yes.
trying to say?
Yes, you have to. I won't say you have to because here's my thing. I'm not saying this strategy is the best strategy and it's the only strategy that works. I understand some people don't have a clue about bank terminology and bank perspective and they still win in the markets. Good for them. But me, obviously, I come from trying to understand exactly why the markets move the way they move. And in that case, I have to understand how retail traders lose in the market and I have to understand their orders in the market and I have to understand the bank's perspective in the market. Because as we go through the course, they are out to get the retail traders. So when you understand their objective and their mindset is and understand how retail traders fall victim to those setups, you learn to not take those setups because you understand that those are easy traps for retail traders and you also understand where the banks are truly trying to go. So yes, I will take in consideration of that always.
Gotcha. Okay, that makes sense.